interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Welcome back to another episode of the Raw Selection Private Equity Podcast, interviewing the leading private equity executives and unlocking their secrets to success. Joining us today is Ewan Mackinnon, partner at Maven Capital Partners. Welcome and thank you for sharing your insights into the industry today.
Thanks, Alex.
So as our normal protocol, Ewan, if you can kind of share a 60 to 90 second breakdown of you, please.
Sure. So in terms of my background, and I'm going to go back to my childhood actually to start with. My father was a bit of an entrepreneur and actually he was a workaholic. And because of that, when I was a young kid, the way I used to spend time with my dad was actually working with him. So from an early age, I worked with my father. He had a chain of retail stores. And from about 14 years old, I was working as many hours as I could, mainly to start with, to be close to my dad, somebody who I respected and admired. But, as I got slightly older, really enjoyed working with him. And I think, later on in school, I knew from an early age that I wanted to work in industry. And therefore, I decided to study business at university and spent 4 years in Aberdeen studying business and then latterly studied accountancy. Once I graduated from university, I worked in my father's retail chain for a number of years. And that was a great learning experience. We grew very, very quickly at the time. We acquired 2 or 3 businesses along the way. So there's a bit of M&A involved as well. And then in the sort of mid-2000s, the market changed very rapidly. We had to downsize quickly. So unfortunately, I went through a period of scaling and then unfortunately having to retreat slightly. And then ultimately, I managed the sale to what was a FTSE 250 business at the time. So, first 8 years of my career was busy in terms of M&A, dealing with cultural challenges of putting various businesses together and working capital challenges when you're coming to grow a business, in particular a retail business, which is a lot of stock. Managing people and the issues that invariably go with that, and then the internet came around in the sort of mid to late 90s, entirely changed the market. It was a technological shift in the market that we were involved in, and I led the sale of the business successfully. So after this, I ended up working in corporate finance. I actually went to work for the corporate finance advisor that we used. I knew the partner very well there. He asked me to come and join his team. So it was total change for me. But what I quite liked about corporate finance was M&A, using accounting knowledge, a bit of business knowledge, and also there was a bit of sales in it as well. And from my retail background, I always loved the sales element. So I joined there in 2006, stayed for about 3 years, and that's when the call of private equity came. I'd worked with what was the Maven team at Aberdeen Asset Management, worked with them on a couple of transactions, knew the lead partner there very well. He told me he was away to set up what's now Maven, and they did a buyout themselves in the late 2000s and asked me if I want to come and join. And I felt that it was ideal for my skill set, having been involved in a business, helping run a business, being at the coalface, and also working in private practice. I thought it was an ideal opportunity to go back, working closer with management teams. And that's when I joined Maven.
Makes sense. Appreciate the background there, Ewan. So what is one mistake that you see private equity firms or their portfolio companies making, and what actions would you suggest to correct them?
Yeah, and it's a really interesting question. And I think at the moment, and I know you'll have heard this time and time again from people, talking to you, there's so much dry powder out there waiting to be invested. And with that comes higher valuations. And that means that value creation is even more and more important to help deliver desired returns. And I think the days of financial gearing, waiting for PE arbitrage have gone. And therefore for PE firms and actually for portfolio companies as well, especially those undertaking a buy and build strategy, Value creation is now fundamental in terms of getting the results and getting the returns that our investors seek. And I think in terms of mistake that sometimes I see our portfolio companies doing, and you can use that in terms of PE firms as well, it's not a one-size-fits-all approach. A lot of people think about the 100-day plan, and that's essentially what we used to do in the good old days. And of course, the first 100 days are still very, very important, but it needs to start a lot earlier than that as part of the diligence process, and it needs to go on way beyond the first 100 days as well. And taking too narrow a view in terms of value creation is also limiting. You need to look at the potential value of every lever that you have. The traditional levers such as buy and build, people and talent are very, very critical, still very important. But there's new levers you need to think about in terms of technology, digital transformation, data analytics, ESG, etc. And these are rapidly gaining ground, and people need to be cognizant of that. The one thing in terms of value creation that you've got to remember as a PE firm is that management teams have been running a process for 6-9 months, perhaps. And, long hours, they've probably cancelled holidays, they're tired, and they'll be exhausted. It is a stressful process. And post-deal, they have a day job to do, and they've got to run the business. So they need help and support. So in terms of the value creation process, it's not about ticking items off a checklist. Somebody told me once, and it's a great analogy, that it's like asking an athlete to run a marathon to Everest. And once he gets to the base camp, I'm asking him to climb Everest straight away. The team need to be equipped for the journey. They need to have a detailed map, and they need the right resources. And we need to be there to help and support them. So, that's probably the one thing that, I've seen in the past where teams have made mistakes. And that can be, as I say, management teams as well as PE teams. And I suppose on that point, don't be afraid to change or augment the management team early on. You're going into supercharged growth when you take on a PE firm, and therefore PE firms need to have the right team. And sometimes, the team that did very well before won't be equipped to take it to the next level.
Well, I obviously agree with that. Certainly that later statement, but I'm sure people would tell me that I should agree with it. But I think that's an interesting, value creation is heavily talked about in private equity, maybe not to the depth and that you've just gone through there. Just out of curiosity there, Ewan, what kind of model do you deploy to drive that value creation into the different portfolio companies? We're seeing a big drive in the US probably over the last 5 years to adopt like the operating partner position, or portfolio director as it's sometimes referred to in Europe. Do you guys use that? Do you guys use obviously you've come from industry and then gone into corporate finance, then moved into private equity. So what kind of model do you use to bring that expertise to new portfolio companies and obviously existing?
Yeah, I mean, we take a board seat on every transaction that we work on. And we typically have a portfolio director that sits on the board, and that's somebody with relevant experience. What we also do is make sure that we have an independent non-exec or potentially chairman that sits on the board as well with relevant industry experience. So we do take that portfolio management approach. I think for me, start early on and make sure your portfolio managers are involved in the deal, so they don't get brought in once your transactors have done the deal, and bring your sector specialists in early on as well, as early as possible. I think that's key. So they've got, they understand the business right at the start when you're doing diligence.
Yeah, makes sense. So we talked obviously about your corporate finance progression in the UK, quite common. Then moved obviously into private equity. But what inspired you to make that move? Because it's interesting. You've gone from industry and retail to then to corporate finance. Obviously, then built connections with what is now the founders of Maven Capital. What inspired you to move into private equity instead of going back to industry, or B, staying in corporate finance?
Yeah, I think private equity was for me the best of both worlds. Working in industry and then going into private practice. When I worked in corporate finance, I did, you do miss the buzz a little bit about being involved in the day-to-day operation of a business. And it's great when you're advising a client, and let's say you're selling a business and you achieve a fantastic multiple for them, or you sell them to PE, and then the relationship ends. And I really missed that when I was involved with management teams for 6 to 9 months, helping them refine their strategy, helping them come up with a business plan, helping them find a partner that would work with them well, and working so closely with them. And then that relationship ends, and you leave them to go on and hopefully succeed with a PE partner. And I missed that, and I felt, it's something I want to do, is to go back into industry. And I felt, having the industry experience, the accounting and corporate finance experience, private equity for me was a natural route to go down.
Transition makes sense. I know it's certainly a common route here in the UK. Maybe not so common in the US. It's more investment banking, more management consulting, but and probably that as well in Europe. But corporate finance does seem to be a popular route in the UK. So for those listening and wondering where Ewan's based, he's based in Scotland, for those who are not too familiar with the accent. As I know, we've got a very international listener base. I'm sure everyone listening's fairly familiar with the private equity hub is London. We personally, our search firm isn't based out of London ourselves. We're based in Leeds. But I know Maven's adopted a local office approach, and also yourself staying strong and with your Scottish roots and staying in Scotland. Do you feel that being outside of London kind of hinders your ability to be able to, complete your business, or do you feel that it offers something different to everyone that's in the capital?
Yeah, I mean, for us, it's the latter, Alex. We do have an office in London. It's still a very important office for us, but we have another 10 offices dotted around the UK, the majority in England and 2, as you mentioned, in Scotland. And we feel that having boots on the ground in regional cities allows us to be close to companies that we can potentially invest in. And I think that when you're focused and concentrated in one city, you can miss opportunities that are occurring in the regions. London is a huge part of the British economy, but there are other key regions out there, and especially today, where multiples are getting higher. A lot of processes in London are run by investment banks and corporate finance houses, as you'd expect. I think you can find a little bit more value when you invest in the regions where they're maybe not advised. You might get to know management teams by meeting them at events, reading about companies in local press, and having boots on the ground. They're living it, they're breathing, they're sleeping in that area. They get to understand the business as well. So it's something that as a firm we're proud of, having offices in each of the key corporate finance regions in the UK. And I think it does allow us to see deals that we otherwise wouldn't if we were solely based in London.
Makes sense. I agree. I think there's a lot of pressure and consideration put on being in London and being there. But I think definitely a local approach in that conversation can certainly be useful for businesses to get more of that face to face, especially when you're buying businesses and building trust with them. And clearly that has worked for you guys up to this point. So one thing I've done with my research was understanding that, Maven adopts what's regarded as the VCT model, or UK Venture Capital Trust model.
Yeah.
What's kind of your opinion on that, and how well has that worked within Maven?
Yeah, so we're slightly unusual as a firm because we've got a number of pools of capital that we can call upon. So VCTs, probably the biggest pot of capital that we have. We manage about £280 million of VCT money, but we also have more traditional private equity. We were doing traditional buyouts, buy-ins, both on a deal-by-deal basis, and we've also got an institutional fund as well. So the VCTs are very much, and for those not from the UK, the VCTs are a scheme that was introduced by the UK government over 25 years ago, where retail investors get a 30% tax break if they invest into a VCT, into venture capital trust. And as long as they hold their shares for 5 years, any income they receive and any capital gains are tax-free. So the UK government introduced this to really try and get investment into specific sectors within the UK economy. And nowadays, that is aimed at the sort of seed and Series A rounds. The UK government undertook a study about 8 years ago, and they found that there was a gap in the market. So a lot of PE firms have moved, up in terms of value. They're lower mid market and above. There's plenty of family offices. There's plenty of high net worth individuals down at the bottom end of the market, but they felt that there was a gap that needed to be filled, and that's where the VCTs come in. And for me, it's been a fantastic success story. And we are targeting businesses that have revenues. They're high growth mode. They're looking to scale. They're looking to internationalize. If it wasn't for the VCT market, a lot of these businesses would not receive the funding that they can to supercharge their growth. Banks are not interested. Most PE firms, it's too small for them, down at that sort of 1-2 million revenue. And this allows companies to get a mixture of capital and expertise to help them accelerate their growth.
Makes sense. Sorry to interrupt here. Just a quick note to highlight our new sponsor, Grata. The private equity market is rapidly shifting to a data-driven, proprietary deal sourcing standard. Grata provides the window into over 7 million middle market private companies. Contact Grata so you can access the market first. Request a demo at www.grata.com. Now back to the podcast. So what do you love about the private equity industry, and equally, Ewan, what do you dislike about it?
So, working for a generalist fund, Maven is a generalist fund. You get to learn from a wide range of industries. You get to see so many different sectors. Thinking about the things I've seen recently: fintech, marketing technology, consumer goods, general industrial. But you can still specialize in specific niches as well. And I think if I go back to my early days working in my dad's business, I love doing deals. I love transacting. I get a huge buzz from the transactional part, negotiating, finding common ground. I also love the operational part as well. It's great working with some of the best entrepreneurs in the UK and learning from them. You learn every day you're working in PE, but also being able to share, the knowledge that I've managed to amass over the years and experience to help businesses grow. So for me, private equity drives growth. It allows companies to innovate, to flourish. And it's great to be part of an industry that's helped some of the most innovative and successful companies, scale, grow employment. And going back to the regional model that we're proud of, help local economies too.
Absolutely. And what do you dislike about it?
Dislike about it? The one thing I would say is, and it's not what I dislike about the industry. I dislike sometimes the press the industry gets, the bad press, which I think is not fair. There has been some examples of funds in the past that have been, asset strippers, and we get a reputation as that we're all like that. We go in, we leverage businesses, and we pay little, we put loads of bank debt, and then we strip assets. That's not what private equity is about. But unfortunately, we can sometimes all be tarred by the same brush. So it'd be great as an industry if we could try and get the mainstream media away from saying that PE is a bad thing. It's not a bad thing at all. So the one thing that sometimes frustrates me is how we can be portrayed as an industry.
I would completely agree with that statement, Ewan. I think the industry gets too much of a bad press, but bad news sells better than
it does. It sells newspapers. Exactly.
I also think the industry, and one of the reasons why we set this up is, and we've had a lot of people that have come and requested to be on the podcast and can't be on it because their private equity firm won't let them talk about it unless we structure the conversation and they tell me exactly what I can ask, and we can't go off structure, which I don't believe is genuine to what we want to explore and do on the podcast here. So I've politely declined. But I think there's a little bit of a hidden private equity secret. And I understand with fundraising and what has to happen here, but it doesn't mean we can't talk about value creation. It doesn't mean we can't talk about the strategies that businesses deploy, because it is fundamentally companies that that you build and you sell, and you grow those organizations, which grow supply chains, which grow local economies and boost loads and loads of different areas. But I think there is an element of, well, it's a bit top secret and we don't want everyone to know about it. And I think that doesn't do us, as an industry any justice, because that secretive nature, hopefully we're giving people an insight more into private equity. Although I
totally agree.
I know from our listeners, most people are in private equity, but
yeah,
hopefully you know about private equity if you work in it. But
Absolutely.
yeah, I think this is just a bit of too much of a cloak and dagger approach to this industry, and a bit too secretive, which happens up and down the scale of small private equity firms to the giant ones.
No, totally agree. And I think there has been better news stories out there. But as you say, it's the people remember the bad stories, and and they sell newspapers, and unfortunately, that's sometimes why we're tarred with the same brush.
Well, who wants to read about the good business that did really well in Bristol that nobody's heard of and
exactly
did X, Y, and Z? But you want to hear about the private equity firm that lost
That's
thousands of people jobs and
Yeah.
hundreds of people jobs and caused loads of problems. So
Indeed.
I understand that that's always going to be the case. But I think if we promoted the industry a little better and we're a bit more open, it might make a bit of a difference. So.
Absolutely.
Ewan, I'm a big reader myself, but what kind of educational resources would you recommend others to in the industry to check out?
Yeah, I mean, it's interesting because when I was asked to do this podcast, I obviously went onto your website, Alex, and I've been listening to loads of the podcasts that you've made, and they're fantastic. They're so interesting, and actually that leads you on to listen to other podcasts, because I know some of the people you've asked to be on the show have done their own podcasts and blogs, and there's so much you can learn there. Really interesting, and something actually I hadn't really got into in the past with podcasts. I've looked on my iPhone, and there's so many that you almost didn't know where to start. So it was
overwhelming, yeah.
Find a specific topics that I'm interested in, which is great. In terms of what else I read, I mean, I subscribe to a publication called Press Reader, and it's a global. I'm not sure if you've got. It's a global platform that corrals all the main newspapers and magazines from all over the world. It's a fantastic resource. So you can read almost every single newspaper is on Press Reader, and you have access to every single one free of charge in most of the major magazines. So I read in terms of what I read on a daily and a weekly basis. I read religiously the mainstream newspaper. So in terms of the UK, like the Sunday Times, the Times, I look at this more left-wing publications such as The Guardian to understand their take on things as well. But again, going back to the regional approach, it's important to understand what's going within the regions of the UK. So I'll read the regional newspapers to understand what's happening there. In Scotland, it's the Scotsman, the Herald, etc. That's really interesting for a regional business such as ourselves, because you're finding out about companies who are issuing press releases. They're talking about the growth that they're undertaking, maybe people they're employing, before they come to market. And that can be a great way to be introduced to businesses, finding out about these small businesses that have scaled, that won contracts, and they're publishing that. So I read a lot of local newspapers as well for that knowledge. In terms of other things, The Economist is fantastic. In the UK, we have a magazine called Money Week. I read every week, get that delivered. It's still the old-fashioned way. And then obviously business books. We read a lot of books, and I suppose when I did a lot more traveling pre-pandemic, anytime I went to Edinburgh Airport, I usually stopped off at the local bookstore and bought another business book, and that includes fiction and non-fiction as well. So yeah, I've recently looked at another Elon Musk bio. In the last 12 months, there's been a couple of books in the Woodford Fund saga. So I've read both of those books. Are really interesting about what happened there, built on a lie when the fund stopped. There's obviously been the recent court case in Theranos. So, if you haven't read Bad Blood, fantastic book. So yeah, a mixture of newspapers, magazines, and fiction and non-fiction books as well.
Excellent. Quite the list I see in the background there. There's quite the stack on the
There's a few
bookshelf.
there.
I guess you were going to answer that with some depth. So very much appreciate that, Ewan. Just on you mentioned there with regards to your deal flow and looking through magazines, it's interesting. I've never had anybody mention that. You mentioned earlier about your deal flow, or you mentioned earlier about deal flow through the usual channels of corporate finance, investment banking. Are you guys predominantly through those methodologies, or do you drive kind of proprietary, as it's referred to nowadays, deal flow for Maven?
Yeah, both. I mean, probably most of the deal flow still comes in the traditional way through corporate finance, through investment banks. But sometimes it's proprietary, and as I say, you learn about companies that are out there through the local media. And if it means you have to pick up the phone, send an email, try and find somebody they're linked to on LinkedIn, see who their bankers are, their accountants that can give you a warm intro, then sometimes you can find off-market opportunities that otherwise you wouldn't.
Absolutely. Seems to be the way. So Ewan, if anybody wants to reach out to you post this podcast, how best do they get in touch, please?
Yeah, I mean, email is fine. My email address is ewan.mackinnon@mavencp.com, and you'll also find me on LinkedIn. I'm on LinkedIn all the time, so you can find me there. They're probably the best two options to get in touch.
Absolutely. We'll put that in the show notes. Well, thank you very much for joining us, Ewan, the first Scot on the Private Equity podcast. Unless we've got a hidden Scot with no accent, but I'm not sure that's the case. So I really appreciate your insight, and thank you very much for sharing all about you, Maven, and the private equity industry.
Perfect. Thank you for having me.
And as always, thank you very much for those joining us. Of course, if you should ever need private equity professionals or portfolio executive hiring in your companies, then please do reach out to me at Raw Selection. But till the next time, keep smashing it. Thank you very much for listening, and all the best. Perfect. That's great.
Thanks,
thank
Alex.
you very much.
Good.
You can breathe a sigh of relief. It's over.
I went past quickly. Yeah. Nice.
Yeah, they usually don't take. Usually feel like it's going to be longer than it is, but it's. We always book an hour in because usually it'll end up going past the hour mark. But that's great. I really appreciate your.
No, not at all. And how often do you do these? How often do you do this?
We go out. So we do one every 2 weeks.
Okay, excellent.
So I actually don't know how many we've done actually.
Well, I've been getting through quite a few of them.
There's a lot. So
there's a few there.
Goes
you do listen
back.
to them, and a number of the guys you've had on in the past have talked about the blogs that the daily blogs, and then I need to go and look that up. So. And there's probably more content out there than you could ever consume.
It's content overload, and I think obviously we did it for brand recognition, which is the key driver of how do we get the Raw Selection brand out there, so people start talking about PER and private Hydrogen Strugals, Russell Reynolds, etc. But a lot of it was just I get to interview really cool people and learn more about what's happening and understanding where it is. But I think we listen to, I'm going to forget who does it now. I'm tempted to say Bain, but I don't think it is. There's one of the private equity ones. It's the driest thing I've ever heard. They just talk about like LBO structures and I'm like, Jesus. Who's listening to this stuff? Because you're already doing this day in, day out. The last thing you need to listen to is LBO structures, and
that would be the first couple of times I tried business podcasts on the Apple Store. I was finding things like that. You'd say, all right, that'll be interesting. You're right. They were so dry, and you think, right, I'll go and put some music on instead.
It's just like,
find the right one that's really, then you get, I need to listen to the next episode. It's fantastic.
Yeah, we've got some good. I mean, obviously, we've got some good people coming up. I would say that, but there's some really good ones. Our most popular one, actually, funnily enough, is a private equity lawyer. A guy called Mario. He's from the US. I think he works for RSM, if I'm right. Mario, and he's there's him and Adam Coffey. Adam Coffey's a serial private equity portfolio exec. If you haven't listened to them, it's worth sending around to portfolio guys, because what he's done is pretty damn impressive.
Right.
I background checked him before we did it as well, and spoke to a few private equity guys, and they were just like, we're a bit annoyed that you're talking to him. And I was like, what do you mean? And he was like, well, you're going to want him. And I was like,
right?
Well, yeah. And funny enough, he's set up his own shop now doing consulting, and it's already done $1 million in revenue. And he only sold like 3 months or something.
Yeah, that's excellent.
So he's flying. But yeah, we've got some. We just got another one. I think it'll be the next one or the one after that comes out from that's all about the recession from Grata. So they've run all the data and looked through what's likely to happen, what's going to happen here, and etc., and what's going to happen to private equity. And then Paul Doyle, who's read every leadership book that's ever existed, who's a managing partner over in the US, he's jumped on and just shared all about leadership and all those kind of areas. So it's it's really interesting what we kind of discuss, and different firms, different approaches, and certainly. We've not, obviously we do speak with a lot of private equity firms, but we haven't had as many on the podcast. It's amazing what's happening in the US in comparison with what's happening here, and operating partner drive, the proprietary deal flow drive. I know firms now that don't do deals through investment banks.
At all.
Purely proprietary deal flow for them to run in, gone really narrow with regards to their niche. One firm that spoke to just a supply chain companies. Really? That's it. They won't touch anything else. Firm that we know in the US, we actually recruit for, Middle Ground Capital. Their marketing is like no other private equity firms. They're really open. They share everything, as much as they can. And they've gone from like first fund, which they managed to raise $1 billion. And they've
first fund. Wow.
Yeah. They're at like, I don't know, they'll finish on 100 people at the end of this year, actually in the private equity firm. And they're bringing in complete utter specialists from industry, just sitting them on there and working on their portfolio companies. So you just get a guy with a playbook that comes in, drops it in. So it's amazing what's happening in the revolution of some of these firms that are driving it. And that's what I'm keen to bring in, because, private equity can be a little bit old school. We're all still based out of London, and you have to do deals in London, all that kind of stuff. So it's really interesting.
Yeah, no, absolutely. And I can take by your accent, you're not from the south either. You're up north.
No, we're Leeds. We're based in Leeds, but are
you based in Leeds, Alex?
Yeah, we've got we're based on the outskirts of Leeds at the moment. We're just relocating into central Leeds just to help us with a talent perspective, because I'm sick of fighting on the periphery. But I grew up just near Wetherby, in between Wetherby and York. So it's I thought about moving down to London and doing that whole thing, and then thought, I like grass and I like trees. Is my not much down there. So absolutely. So we've done we do pretty well, considering we're not based in London. Done plenty of work with London-based firms, etc. And we've done so well in North America.
That's excellent. That's really good.
Why we're trying now to kind of build the
focus on that.
Focus obviously deep dive on that, but then also see what we can do to actually get some more business on our backyard type of process. But from working in industry and obviously your portfolio companies, you just it's all about timing and exposure and bringing value to the market. And it's a tough gig, but very enjoyable. So it's a bloody good market at the moment. I wish it wouldn't end, but it's going to.
I know. It's we know these things go up and down. So
that's it. The way I look at it is we're only we're very close to the next bull run, as I see it.
I think so.
Another 10 years post this based on
blip,
isn't it?
But exactly.
It's going to be an interesting one, depending who you follow. If you follow Ray Dalio, the world's going to end tomorrow. You just going to see in private equity will pull through, and there'll be a consolidation. People will buy loads more businesses, and it'll just make everything a bit tougher for a bit. But it's going to be interesting to see what happens to the dry powder, because that is going to fall off a cliff. But it's competitive for you guys out there at the moment. There's so many firms in private equity, and they're starting up every day. It's so
fragmented.
Difficult. At least you've got that local.
I do think that does make a difference. I do. And the other thing I didn't say, management teams like dealing with local people, especially, Scots, Yorkshiremen, people in the Northeast.
In your smaller type businesses, 100%.
They do.
Preference. I mean, Mercy have done well with that. I mean, I know they're purely V venture, aren't they? But an early stage at that perspective. But they've done well with their.
They've done well. Yeah, they've got a similar model to us, and Foresight as well have a similar model to us.
They've got.
We invest alongside both of them as well. We know them well.
And then the only person in private equity that's really pushed that model is LDC, really.
BGF as well, I suppose.
BGF
do have. But you're right, not many others have.
Yeah, everyone's kind of stayed London bound, and
I can understand why. It's not a cheap way of doing it. You've got to have offices in every city, rent rate, you've got people, so you need to get the deal for it to work.
It opens you up to talent though, because that's one thing. Unless you're in London, it's difficult.
It's difficult. Yeah, absolutely. Yeah, that's true.
It's kind of one of them really, where it closes the door a little bit, but also opens the door.
Yeah, it opens as well. Yeah,
so it can be tough. But look, I really appreciate.
Not at all. And again, thanks for having me on. That was really good.
My absolute pleasure. So I'll shoot you an email with when it goes before it goes live. And
thanks, Alex.
Yeah, thank you very much.
Appreciate that. Okay, good to speak to you. Cheers now.
You too. Thanks a lot.
Cheers. Bye-bye.
Thanks. Bye.
Thank you for listening to the Private Equity Podcast on www.raw-selection.com.